Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to the first edition of 2014 of Java with Jared. Hope you guys are doing fantastic. Yep, it is 2014. I'm going to take these glasses off because they're going to be annoying. But Happy New Year. Hope you guys had a very wonderful 2013 and welcome to 2014. And it is going to be a pretty interesting year with increased regulation in the mortgage industry. We're going to be dealing with things like QM and QRM, and over the next couple weeks I'll talk to you a little bit more about what this increased regulation is going to do, or at least what my thoughts might do to the mortgage business and actually real estate and what effects that might have. We're also going to be dealing with 2014. The reality is that tapering has begun for the quantitative easing. So the Federal Reserve did announce in Ben Bernanke's last meeting they will start tapering mortgage-backed securities, and I'll talk about that and how that's affecting the market in this edition of Java with Jared. But first of all, I wanted to apologize. It's been a couple of weeks since I've sent out my Java with Jared, actually about 3 weeks, and I do apologize for that. I had a family event that happened that I really had to direct all my attention to that, so it made getting the Java with Jared out difficult. So I do apologize about that, but it's my intent to try to get this to you each and every week because I want you to be an expert in what's going on with interest rates, so your clients, when they ask you these questions, you'll be able to give intelligent answers and hopefully sell more real estate because of it. But over the last 3 weeks here, we've seen interest rates get slightly worse, and the big news really was that the Federal Reserve did announce that it will start tapering the quantitative easing. They're going to buy less mortgage-backed securities and treasuries, and they announced that they would buy about $10 billion less. They were buying almost $80 billion before, so now it's going to be closer to $70 billion. And the real fear is that when the Federal Reserve announced that they would start the tapering, that we would see interest rates get hammered. The great news is that really hasn't happened. While interest rates did drift slightly higher, it wasn't a really big drift higher. They did not skyrocket, and that's really good news. And here's why. This is all about supply and demand in terms of economics. When the Federal Reserve is in there buying a whole lot of mortgage-backed securities, that's keeping interest rates low because it's they're the 900-pound gorilla in there, and they're buying all these mortgage-backed securities to keep that yield low. Well, they're buying less. And the reality is, though, right now, there's just less mortgage-backed securities to buy. Back earlier in the year when interest rates got really low, there was a big supply already on the market because people were refinancing their mortgage. And there were a lot of people buying houses. There still are a lot of people buying houses, but all those people refinancing their mortgage, those mortgage-backed securities have already been issued, and people have already refinanced, and so there's not as much supply out there on the market. So the additional demand that the Federal Reserve was creating by buying all these mortgage-backed securities, and now that they've lessened that, it's not having a huge effect because there are just less mortgage-backed securities to buy. So that's the good news. It did not really cause interest rates to get clobbered. So we're still seeing phenomenally low rates. It's still a wonderful time, now that it's the beginning of the year, to reach out to your clients and wish them a very happy 2014 and let them know that, at least for right now, interest rates are super low and it's still an amazing time to buy. So we haven't seen a really large increase into rates because of the quantitative easing. Now, that will eventually, rates do just eventually have to go up. So again, just let your clients know that strike while the iron's hot and make sure that they make 2014 a fantastic year for themselves. And if they're thinking about buying a house, it's going to be a great year to do it. That's the edition with Java with Jared for this week, and we'll be back with you next week. And I'll get a little bit more into what effect, again, QM and QRM might have on the real estate and mortgage industry in 2014, and let you know more specifics on economic data. Have a wonderful 2014. Happy New Year, everybody, and we'll talk to you soon. Bye-bye.